In this presentation, we will continue on with our fairly comprehensive problem related to the general fund and the government-wide type activity. We have the information on the left-hand side. We've been entering that information into the blue area on the right side. At this point in time, we've recorded all of the transactions on the left side to our general journal for both the general fund and the government-wide activities. We've posted those activities to our trial balance, and we have the ending trial balance here. Now what we're going to do is look at the closing entries for the general fund, and then we'll take a look at the creation of the financial statements. We'll create financial statements, and we will create them with regards to the general fund, picking up the data from the ending balance on the trial balance within the general fund. So now we're going to scroll down, and we're going to do the closing entries actually down here. So what we've done down here is we've, in essence, taken these ending balances, and we've moved them to the beginning balances down here. So these are going to be our beginning balances, are the same as the ending balances, and now we're going to record our closing entries down below. You'll recall that closing entries, when you're in a for-profit organization, is going to be everything below the equity section, which would be below like the blue area. This is the equivalent of the equity section, or assets minus liability type section, which typically has income statement accounts, revenue, and expenses, and we usually close them out to some equity account, which would be like a capital account or retained earnings type of account. It's going to be a similar fashion here, so we'll do much the same thing. All these accounts below, except there's going to be an exception with this encumbrances, which is a little bit funny, are generally going to be closed out. They're temporary accounts that will be closed out to some type of equity kind of equivalent type of account, assets minus liabilities type of account typically. And so we need to do that. However, we have some differences between these accounts in terms of what type of accounts we have, because we have budgetary accounts, we have normal, what we would think is kind of income statement accounts, and then we've got this encumbrances, which is a little bit odd account in and of itself. So first, we're going to reverse the two transactions, one for the budgetary accounts, one for the income statement type accounts, and then we want to note that this encumbrance account may just remain there because this is a little bit different of account. Remember what this is, it's kind of a holding account, and we're going to record the encumbrances and the related encumbrances outstanding, and they'll be equal and opposite typically, and then they will reverse when we have the related expense. So I would think of these as like a clearing account as opposed to like a normal temporary account, which, you know, it's temporary and then it's going to go up and then go down to zero, but not based on a closing journal entry per se. It's going to be based on when the expenditure happens. So this is just a holding place until the expenditure happens and then we reverse it. So in our case, this is actually going to remain very unusual type of thing. Down here, we've got this account that's just going to be hanging out here. It's not a budgetary account. It's not really an income statement account. It's just going to be the encumbrance, and the opposite of it will be sitting up here in the equity equivalent type section. So here we go. We're gonna reverse both. We're gonna reverse first the budgetary accounts. We need to name what are the budgetary accounts. We're gonna say the estimated revenue. That's a budget account. I'm gonna put a little yellow dot by it to represent that. And then we have the appropriations. That's going to be a budgetary account. Once again, yellow dot to indicate that. The other two, revenues and expenditures, are going to be the income statement type of accounts. So I need to close these out. Estimated revenue, that's got a debit balance, so we need to credit it. And we have the expenditures. It has, the appropriations has a credit balance, so we need to debit it. So let's put the appropriations on top, just to typically have the debits on top. So I'm going to go up top. And let's start recording our transaction. I'm going to say this equals, and we'll pick up the appropriations. So there we have that, and that's going to be, I'm going to say a debit, negative of the balance that's currently in there. We have to pick it up from this side. So I'm going to say there it is. And then we have the other side is going to be the estimated revenue, and that's going to be a credit, and I'm going to say negative of what is in the estimated revenue, which is this number. So I'm going to credit what exactly is in there to make it go to zero. And then the difference is going to be a credit. Debits are winning, so we're going to have a credit negative sum of this. So we need 42.5 of a credit. That then, of course, equals the budgetary fund balance because we're reversing the thing basically exactly. So it's going to be going into the budgetary fund balance, and we'll just reverse the budgetary accounts. So let's post these. We're going to say the appropriations. Scroll down, here's the appropriations in P70 equals, and we'll scroll back up and we'll pick up that amount. That'll bring it to 0. That's what we want. And then we've got the estimated revenues. So here's the estimated revenues. We are in P68 equals. Picking up the estimated revenues and enter. So there we have that. Goes down to 0. And then the difference is going to go to the budgetary fund balance. So here's the budgetary fund balance. We are in P66. And that's going to be the 42.5, bringing it down to 0. So we've now just basically just reversed the budgetary accounts. Now we're going to do what we would normally do. I'm going to make under normal accounting, financial accounting, and reverse the temporary accounts, the income statement type accounts, revenue, and the related expenses, expenditures in our case. So we're going to say revenues then has a credit balance. We need to make it go down. We're going to debit revenues. So I'm going to go back up and say, all right, the next journal entry, we're going to say revenues needs to be a debit. We're just going to debit exactly for what's in it. That's what's in it. I'm going to pick it up and reverse the sign. So negative of that number, just picking it up and reversing the sign of this number, picking it up and reversing the sign. And then we want the expenses right below it. So right underneath, we're going to say this equals the expenses, expenditures. That's got this amount in it. We need to credit it to make it go away. So we're going to say negative to flip the sign of that number. And there we have that. And then we need a credit to balance this out, negative sum of these. And there's our credit. Where's that going to go? It's going to go into a fund balance unassigned. So that's kind of like our equity equivalent type of account that it's going to roll into. So this is going to be equal to the fund balance unassigned. So there we have it. Let's go ahead and post this out. So we're going to go to revenues. So here's revenues. We want to be in P69 equals. We're going to scroll back up and we're going to pick up the revenues, and that makes it go down to 0. And then we want the expenditures. So we're going to say expenditures. That's going to be down here in P71 equals, and we'll go back up and pick up the expenditures and enter. So that brings it down to 0. And then we're going to put that into the fund balance unassigned. Fund balance unassigned is going to be here. This equals the fund balance. And there we have it. So now we've closed everything out. Everything in the blue areas is now 0, except that funny encumbrances, which may not close out again. It's always going to have the reversing up here. I would think of it as more of a clearing account in some cases, meaning it's going to go from 0 up and then clear back down to 0, but not in terms of the closing process per se, but in terms of when the related expenditures happen, that's when the reversing process will take place. Okay, so now we're going to take a look at financial statements. We're going to take our ending balance in the general fund, create financial statements from them. So what we want to do here, our financial statements are going to be over here to the right. We're going to hide some cells then to get these financial statements right next to the general fund. So that means that this government-wide stuff, we want to hide those columns, get those out of the way so that we can be right next to the data that we're working at. So to do that, we want to be on column X. So I'm going to put my cursor on column X so we have that drop down that looks like this. Left click on it, and then I'm going to drag over and highlight to or select to AG. So X to AG, let go, right click on the selected area and hide it. So there we have it. And so now we're going to pick up our data from the end trial balance here, the ending trial balance. And if you want not to get messed up with the beginning trial balance, you can even hide these cells if you so choose. So for example, you can put your cursor on O to P, let go, right click, hide. And now we've just got a straight trial balance, and we could just say, all right, I'm just picking up these numbers, putting them right into our financial statements. So we're going to be picking up our financial statements here. And so we're going to say that we have assets, liabilities, and fund balance. So it's typical kind of balance sheet that we'll have. We're going to go straight through it. We're going to say that the assets are going to start with cash. So we've got cash, and that's going to be equal to this 777,460. And then we're going to go to the taxes receivable. You'll note that we don't see, by the way, current and long-term portion, because typically when we're in the general fund, we're thinking about current activities. So this will typically be current type of activities. We're looking for current flow within the general fund. Then we're going to say taxes receivable. Taxes receivable, we don't need these two because they're gone. Delinquent, taxes receivable, delinquent. I'm going to pull that into the inner column and then subtract out the allowance. So this is going to be equal to the 383.29. And then we have the allowance. So we have the allowance for uncollectible, and we might want to say less the allowance. You could put this in as a positive or a negative. It's up to you to see it. We're going to say, I'll keep it as a negative, picking up that credit. I'm gonna make the cells a little wider so that we see this. And then I'm going to pull the difference down here. So I'm going to say this is equal to the sum of these two. Oop, I have missed the equal sign. Equals the sum of these two items. So in essence, subtracting them, positive number minus the negative number, we have that. That's going to give us our, we're going to call it net taxes receivable for the delinquent items. And then we're going to do the same for the interest. Notice when we find a home, basically I found a home for all these. So I'm just going to mark it off as yellow and say we're good there. And then this is going to be the interest receivable. And then we have the allowance related to the interest. So this will be equal to the interest. This will be equal to the allowance. And I'll pull that to the outside again, equals the sum of those two. And we're just going to call that net interest and penalties. And once again, we found a home for these two. So that's looking good. And then we've got the inventory of supplies. I'm just going to pull that to the outer column. We don't have to net it against anything. Notice we don't have any property, plant, and equipment here because, again, we're dealing with the current flows, current assets typically, and the current flows. So we're going to say that this is going to be total assets, and this will be the sum equals the sum of this outer column. And there we have it. So, and we could double check this by saying, okay, does that just sum up over here? Notice we have some contra accounts, but they're represented with credits represented with negatives. So I could just highlight this whole thing and say, does that line up? We got 934.80, 934.80, looks good. Let's move forward. So then we're going to go to the liabilities. We're going to start off, we got the liabilities and the fund balance, which is like the equity. So, well, liabilities, this should be yellow. Why is that? This should be the same color. I'm not going with these different colors right here. And then we're going to say the voucher payable under the liabilities. Now, again, notice we're not really breaking out. It doesn't say current liabilities. We're just saying liabilities because typically they're going to be current because we're on the balance for a fund, the general fund. So in cell AI15, I'm going to say negative to flip the sign of that number. Now, the next item we have is kind of a liability, but it's going to be grouped. It's a little bit different in terms of the formula, but we're going to group it in the liabilities, and in the subtotal, we're going to say that we have the total liabilities and this deferred inflows of resources. So notice it's kind of acting like a liability, but it is kind of a little bit different in that it's that account that's representing us reversing the revenue that was on an accrual basis to more of a cash basis, but not wanting to reverse the related accrual account, which was the accounts receivable, and therefore we make this other account, which is the deferred inflow of resources. So there we have that. And that's going to be negative of this number. And then we're going to say that the total then is going to be the total liabilities and deferred inflow of resources. I'm going to break that, move that out, and pull this to the outer column then, and we'll sum this up. So there's our liabilities. So now we found a home for all these, not the zeros, but we don't need to find a home for the zeros. If we highlight those or select them in Excel, we could check it and say, does that add up? It does, 256,490. So we look good. So it might not be, it's kind of small. It might not be, it totally adds up. So we're working good. And then we've got the fund balance section. So now we are on the fund balance. Within the fund balance, we have the non-spendable inventory of supplies. So I'm going to pick that up. So I'm going to flip the sign. Again, I want it to make it a positive. So I'm going to say negative of that 19.9. So that is what it is. And we've got the fund balance unassigned. Now here's where the kind of the tricky component is, because you'll recall from making financial statements for the for-profit that the fund balance really is kind of equivalent to the equity section. So here's kind of like the equity section. And then we have to close out the income statement accounts to it. But we have down here, it's kind of confusing because we have budgetary accounts and we have non-budgetary accounts, and then we have this encumbrances, which throws everything off. So we could say, okay, you know, the ones that we have to include in the ending fund balance, it's going to include this amount, it's going to include the revenues, and it's going to include the expenditures. So, and these is a credit, and the revenue is a credit, and this is a debit, so I can just add those up. So I should be able to say then, this equals this number plus this number plus this number. And then I won't include the budgetary accounts. Now I want to flip the sign, make it a positive here rather than a credit. So I'm going to double click on it, go to the front of it, negative, and then put brackets around it. So I'm just going to say, take the whole thing, brackets, and flip the sign, negative in front of it, and enter. And so that's one way we can think of it. Now you can also think of it, I mean, if we looked at the closing entries down here, and the closing entries, of course, there's the number because we closed it out here. So you could think of it in terms of journal entries, which we did. It's that same number. In the post-closing trial balance, we have this. Notice encumbrances isn't included in it. Confusing, but it is what it is. So there we have that. Now the other way you can think about it is if you have your trial balance formatted this way. Notice the credits are negatives and the debits are positive. So the accounts that are going to be the budgetary fund balance accounts are going to wash themselves out. And even the encumbrance is going to wash itself out. In other words, you'll note that this budgetary fund balance here and the estimated revenue, if I highlight that, and the appropriations sum out to 0. Debits minus the credits equals 0. And this sums out to 0 because the debits and credits equal 0. So if you have your worksheet formatted this way, debits positive and credits negative, you could just say equals the sum of this whole thing, in the fund balance on down, right? And you'll end up with the same number. I could just say negative of that number, negative of all of it. Why? Because the only thing left over that doesn't clear out this, you know, if we think about it this way, we're going to say, you know, this clears out. I'll make it a different color. And with this, makes it 0. And then, of course, the budgetary accounts will make them blue. They're going to clear out with the estimated revenue and the appropriations. So they go to 0, and you're left with the revenue and expenditures. So it'll all clear out to 0. So for that reason, you could just sum up the whole thing. That's what you would do normally or how I would do it if you set up your Excel sheet this way with normal accounting, with a for-profit accounting. So in any case, there is that. So there's our fund balance. Notice what we're not including is the encumbrances. Now, why can we still be in balance without including encumbrances? Because we're not including the other side of it, which is in equity, the encumbrances outstanding. They wash out to 0. So we don't need to include them. We're just going to say we're not going to be including the encumbrances and pull them out. And we're also not going to be including the budgetary accounts. And you can ask, well, how can we be in balance when we posted the budgetary accounts and we're not going to record them anywhere? Well, because again, they just clear out, because here's the equity account and then here's the related expense accounts. They clear out to 0. So we're just not going to include them, and it will be okay. We'll still be in balance because they all just, we're clearing out the entire journal entry. Okay, so then we're going to say that that's going to add up. That's going to give us our total fund balance. Then I'm going to indent that 2 times. I'm going to underline this. We're going to put that in the outer column equals the sum of these items. And then we're going to have the total liabilities and fund balance, where we're going to add up the outer column equals the sum of the outer column, the liabilities and that deferred inflow resources, and the fund balance is kind of like the equity section. There we go. And that adds up to the equity up here. And again, a little confusing because it seems like we didn't include some things. We didn't really include this. We didn't include the estimated accounts, and we didn't include the encumbrances. But they all wash out. Remember, they all wash out. So that'll take a little bit of time to mull over, but it does make sense. All right, so now we're going to do the next statement, which of course is a statement of revenues, expenditures, and changes in fund balance. It's kind of like the income statement. And so we'll do that. We're going to hide these cells again so we can get to this statement. So I'm going to put my cursor on AH. I'm going to select over to AK, let go, right click on the selected area and hide. And there we have it. So we're side by side with the data. I'm going to, we can undo the marks down here so that we can remark it up as we look at the income statement, which of course will be related to these items down below. Okay, so in our income statement type of account, we're gonna start off with the revenue, of course. So we'll have revenue, and we're gonna break out the revenue now. So note the revenue here. We have the revenue here, but we only have one line item of the revenue. And we would like to break it out into the detail up here, and we want to break it out into tax revenue, interest and penalties, and other. Now, typically we would make oftentimes, where would we get that information? You might ask. We might make a subsidiary ledger, which will then give us the detail of this information. We haven't done that here. We don't have the subsidiary ledger. Therefore, we're going to go back into the data. We go into like the GL, the construction. We don't have a GL. What we have is the trial balance and the information between the trial balance in our worksheet. So we can go back to the actual journal entries in the data. So what we're going to do is I'm going to unhide these cells. Then we're going to go back and look at the data and just pick up the revenue accounts in these categories. So it's be a little bit tricky to do, but often something that we have to go back and figure things out in this format. So that's what we'll do here. I'm going to put my cursor on Q. I'm going to go all the way to the left to unhide anything from Q on back. So I selected everything back to A, right click on that selected area, unhide. So now we have the adjusting columns here, and we have all of our journal entries. So what we want to do then is say, okay, well, here's our revenue account. I want to break them out into our categories. This is kind of like the GL activity. This is everything that's included in it. So where does that information come from? You could find that by going, I use these tools up top. So you can go to the formulas, into the formula auditing, and use these tools to trace back. I put them up here into the quick toolbar by right-clicking and add to the quick toolbar. And then I'm going to say, where's that coming from? That's what's in that cell. Then we can start piecing together where these items came from. Now, what I'd like to look for first, what's going to be easier, is to look for those items that are going to have less transactions in them. So in other words, let's look for the items that are related to the interest and penalties and the other, and then everything else will be for the tax transactions. So for example, if we look at the 5B transaction, we've got this 408330. That consists of these two items here. One of those is going to be interest and penalties. So we have this interest and penalties, which is increasing this 408. So interest and penalties, I'm going to say 20,960 of this is interest and penalties. So let's pick that up first. I'm going to say, all right, interest and penalties is going to be equal to, I'm going to scroll back over, and we can pick it up from the data here, the number 5, that 20,960. So 20,960 for the interest. And then if we go back over and say, all right, what else do we have here? The other transaction is going to be this item. So you'll recall this 951 on number 11 was down here from revenue other than the taxes collected. So that's going to be something different than taxes. So we're going to break that out and say, all right, there's revenue other than taxes. And I'll put that into other. And so that's going to be, I'll pick it up from here. And then we know the total. I'm going to say, okay, well, the total in terms of all the revenue, I can actually pick that up and say, let's say the total is negative of this number. That's what we need it to be. And so then we could say, then what does revenue have to be? It's got to be this total minus the other categories, right? We're going to say it's going to be the 3417330 minus the 20960 minus the 951000. So there we have it. And so I can do that with a formula here. This equals this number, the total, minus the sum of these items. And that'll give us this number. If we double click on it, there's the formula. And so here it is. And then if we highlight those items, it lines up and we add up to this item here. And next thing we're going to do are the expenditures. So we're going to have the expenditures, and we'll do the same type of activity. We're going to break these out into categories of salaries and wages, interest on notes payable, and other, which is where everything else is going to go. If we have the expenditures down here, we only have one line item. We don't have the subsidiary ledger, so we're going to do the same type of activity. We're going to go into this line item and look at the detail within it. And so in essence, I want to look for the salaries and wages and the interest, and then put everything else into other after that. So I'm going to put my cursor on this item in P23, see where that comes from. And then we're looking for basically the salary, and that's going to be this one, this expenditure item. This has to do with the federal taxes. So number 9 had to do with salary information. So this is going to be the salary, and this is the taxes for the employer taxes. Those are the two items we want. For the salary and wages, we're going to group the payroll taxes in the same line item. So I'm going to pick up this, and then we want this one. So there is that, and then we want the interest on the note. Interest on the note is going to be over here. This is where we recorded the tax anticipation note. Here's going to be the related interest, so that's going to be the interest on the note. So we want to break that out separately. So I'm going to go back over. Interest on the note is equal to, scrolling back over, that 14,560. And then the difference is going to go into other. So the difference, what I mean is, we're going to say total expenditures. I'll pick that up from down here. This is the total. So I'll say that's the total. I'm going to put that in the outer column. And then the difference between the two is going to be this item. So we're going to say, all right, this is going to be the 2959770 minus the 926,270 minus the 14560. That's going to be going here. Let's do that with a formula. So we're going to say this equals this number minus the sum of these two. And so there we have it. Now if we add this up, it adds up to this. Now we're going to call this line item excess of revenue over expenses, which is going to be equal to the outer column. So the total revenue minus the expenses. And then the next line item we're going to have is going to be an increase in inventory of supplies, because now this is going to be basically our kind of net income type of item, which if we look down here would be basically this line item for the revenue and expenses. So it's going to be the 457,560. And then what we had to do here on the equity section is we have this equity account dealing with the difference in supplies. So that's we're gonna have to account for that in order to tie out to our fund balance, which is gonna be kind of like the balance sheet activities. So we're gonna say, all right, we had an increase in supplies. I'm gonna say negative of that number, increasing of supplies. And then we can get into our beginning fund balance. Now we're basically tying this out to the equity. So the beginning fund balance then is going to be these two items, and it's going to be before this 3,004. So that's why we have to break out that 3,004. So I'm going to say this is going to be the fund balance is going to be the negative sum of these two items, and then we've got the ending fund balance, and the ending fund balance then is going to be the sum of these three. We've got kind of like the net income, excess of revenue over expenses, this change in the fund balance. And you could compare this. This isn't the same as draws, but you can compare it to kind of like draws because something got posted in essence to an equity account. And you could tell that's going to happen because you got this funny kind of equity account here. So that's, had that change in the fund balance. And then we're going to have the ending balance, which will equal the sum of these items, and that'll give us the ending fund balance. And the ending balance will tie out to the balance sheet. So that ending balance is going to tie out to the balance sheet. And you'll also recall that if we sum up this data as we did when we calculated the balance sheet, you could basically highlight the whole thing the way that we have it formatted here, and you'll come up to that 677,590. Now again, that's a little deceiving because we're netting things out. That's nicely worked out because of the debits and credit format, debits being positive, credits being negative in our worksheet. So you'll recall that we're canceling out things like the encumbrance and the encumbrance down here, and the budgetary account and some budgetary account to make that work. So just be aware of that. Also note that on the income statement, we don't have the encumbrances. We just left the encumbrances out completely. We left the entire budgetary accounts out completely. How can we do that? Once again, because they cancel each other out. So this cancels out on the balance sheet and the income statement, as does the budgetary accounts. Therefore, we just remove them entirely. We're still in balance. Debits and credits have been removed in equal proportion, so we're okay. So now we're gonna go up top. I'm just gonna unhide everything. So I'm gonna put my cursor on AL, and then I'm gonna drag all the way to A, and then right click on that selected area and unhide, so that you now have everything visible here. So we've got the general fund, 2 columns, and then we've got the government wide. And then we have our financial statements. And of course, on the financial statements, we'll see that the ending balance here is in the fund balance in the liabilities and equities section. And of course, our assets equal to liabilities and the fund balance.